All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you. Yeah, just I was uh, let's see if I can pull this up for you. Every once in a while I like to share with you guys something. If you want to see my grandfather here, let's see, who passed away. Let's see. Some of these, it's like we find some of these old pictures. This like, there he is right there. That's my wife and my oldest son. Um, but yeah, that's him and his wife. It's actually my father right there. So yeah, just he's at a kid's birthday. That's him right there. So anyway, yeah, I was pulling together some old pictures last night because we were putting together some slideshows, for his first his service tomorrow. So anyway, okay. What I wanted to do is I wanted to grab the bias chart here. I just happened to see that as I was pulling it up. So here is the here's the euro dollar, and when we were all looking through pictures, we realized how few pictures we had with him. All of us grandkids, and like he didn't like getting his picture taken, obviously, and we realized how sad it was yesterday that we just didn't have very many with him. It's pretty sad. Anyway, okay. Let's start with the euro dollar. So as I had mentioned to you guys before, so just go back to yesterday. So here we are yesterday. We're trading around the 113 level, and as I told you yesterday, what I'm looking for is a move down to 112.50, 112.25, get some support down here, and for the euro to get down there, and this would be a good thing that would happen ahead of the FOMC. So here we are. We dropped below that 112.25, a little further than I thought we would go, but we'll probably find some support, obviously, around here. I don't think I'd be on the short side of the euro at current levels. We might get down to 112, but I don't think I would be establishing new shorts here. You have to really be on the short side of the cable already. You have to be on the short side of the cable already versus trying to establish a short down here, in my opinion. All right. Now, the good news is if you get a bounce in the pound or in the euro, a move back up to like 112.60 should offer some sellers. You have some place to sell. So if you get a bounce here, that's probably not a bad place to be on the short side of the euro. Support will probably be down at 112. So you've got some room down here. Now, how many of you are short the euro dollar? How many of you are short the euro dollar from above 113? Some of you guys are still short from 113. See, if you're short from like 113 or above, you're in good shape. You got some wiggle room now, and that's the way I'm looking at the Fed meeting tomorrow. Is, well, let's say the Fed doesn't raise rates. They just leave rates as expected on hold. We might get a hawkish statement which suggests that the Fed's ready to raise rates in October or December, which, like I said, any dip in the dollar is going to be bought even if the Fed doesn't raise rates, because their accompanying statement is probably going to be fairly hawkish. So if the euro rallies following the Fed meeting, we might get back to 113. We might get to 113.50, but you're not going to lose a whole lot. You know what I mean? And this is the point of being short the euro dollar, being short the euro dollar ahead of time. Up at the 113s is because you have profits to give away now. You know what I mean? So you're giving that, you have like that cushion now that you can deal with. And that's important going into a huge meeting. Now, let's say the Fed does the unthinkable and they raise rates, and they suggest that rates are going to probably steadily go higher from here. The euro will probably break through 111 tomorrow. We might crack through 112, 111.50. We might break 111 tomorrow. And if you're short from way up here and it breaks through 111, well, now you got to move down towards 110, 108, maybe even lower, and you're going to have a really nice position average on the way down. Does it make sense? So anyway, yeah, and so if you're shorting it from here, I don't think that's a very good idea because let's say the Fed does what everybody expects and they actually leave rates unchanged, the euro is going to spike back up to 113 or 113.50, and if you're short at 112.50, you're kind of screwed. You're upside down 100 pips, trying to wiggle yourself out of a trade over the next couple of days, which I still think you'll end up making money, but it's going to be more frustrating than anything. So there you go. Okay, let's mark up today's resistance about 112.50, 112.60 actually. I'm sorry, 112.60. Support's going to be 112. If you're short the euro and you're like, okay, well, I'm not going to hold my position through the FOMC. I'm just not going to do it. Well, fine. Why don't you look to take some profits down here? It makes sense. You've got a nice profit, and rich man never went broke taking profits. Confucius say. So anyway, let's go over to the cable. Now the cable is obviously a little stronger. I'm still short from 154.53. That's where my cost average is on the pound dollar. So I'm sitting in a 32 pip profit. Okay, and that's where my cost average is. Now my cost average was a little bit lower, but I took some profits yesterday. So they do FIFO, and everybody, you know this. Uh, I've been inching my way into a pound short, so obviously it took some of my other position off. So my cost average is actually higher at 154.53 because that was my last positions in. Okay, so but it's small. It's not a huge position at all, and I'm only up 30 pips right now. Obviously, it was up a little bit more overnight, but this cable squeeze is had something to do with it. Now, in regards to the pound dollar, the pound's up because average hourly earnings were stronger. You had a lower unemployment rate, and that wage inflation is it's got cable bulls a little stirred up this morning. Now, I don't know if I'd necessarily go long the cable here. If you want to go long the cable, buying it back down here at 153.50 makes more sense. Okay. We should have some resistance through here, all the way up to 154.50. This is probably a good area to be on the short side of the cable if you can get it. I don't know if we're going to make it all the way back up here to 154.75. I think 154.50 will probably do it for today. 153.50 would also be a good place to be on the long side. If in just because I feel a certain way, I have to reiterate, it doesn't mean it's the right way of thinking. I've been wrong on plenty of things. I will continue to be off base on plenty of things as my career, continues in the currency market, and I may be completely off base about the dollar. I mean, the Fed could raise rates tomorrow, and the dollar could completely crap the bed. You know, as some believe. I may end up being completely off base, and you might be one of those people that believe that. Okay, and if you're like, well, Blake, I am dead set on being short the dollar going into tomorrow's meeting, and I think that if the Fed raises rates, it's going to kick off a bearish dollar cycle, and I'm going to short the dollar. And if that's your attitude, that's your attitude, and if that's your strategy, that's your strategy. So be it. I don't think this is a good place to buy the pound, though. I don't think this is a good place to short the dollar today. I think if you want to short the dollar, why don't you buy the pound if it gets down to where my cursor's at 153.50? You know what I mean? If you want to play the dollar to the short side, buy it right here. You know, that's where I would be looking. No, I'm obviously bullish the dollar, but I'm just saying if I was bearish and that was my strategy, I would be buying down here. I wouldn't be paying it up here. Okay. Okay, 154.50, 153.50. Those are your ranges. 154, oops, 50, 53, 50, 154.50 range. All right, let's take a look at the Swissy. So the Swissy, I'm hoping the Swissy stays firm because this is my bigger position out of all my dollar positions, and it's not huge by any stretch of the means, but it is. I kept more of my Swiss franc short than anything else. I told you guys yesterday that's what I was going to do. I was going to try to maintain my dollar Swiss more so than the other dollar pairs. I took some good profits yesterday. I took a third of my current positions off on the euro, the cable, the Canadian. Yesterday, I sold some of the Canadian at 132.65 or something. I sold I got exited some of my pound at 153 like 50. I exited some of my euro at 112 like 50 or 112 60. But my Swissy I didn't take any off because I am still looking at this weekly multi-decade breakout if the dollar rallies. And I want to be around for this one. This is, as I've explained to you the last couple of weeks, this is that trade that can put me over the edge for the year if it works out the way I plan it on it to. You know, as I talked about it the last week or so. There are a couple of trades every year that are the trades that really put me over the top. And you know, this if the Swissy breaks out above parity, I mean it's going to be a mega move in my opinion. And I want to have some exposure going into that trend line because if it breaks, obviously I'm going to start chasing it higher. So that's why I've kept my dollar Swiss. I do own it at 97 97.06 is my cost average. I That's my cost average because again we do FIFO, so my other earlier positions already got taken off the table. But we're you know we're coming up to some resistance. I mean this you can see the Swissy right here. We've already broken this, or trying to anyway. I guess we haven't. I thought it looked like it was more breaking out, but we're kind of right up against some resistance. I guess a break above 97.60. Well, shoot, I got to write down 97.65, huh? 97.65 would be some resistance right now. Big resistance too. If you guys want to short it, look, I'm long, but if you want to short it, probably not a bad place to short it. So we can try to get a dip down here, but I don't know if we're going to get a dip down to 96 cents today. That would be following the FOMC. I think I probably drew this out yesterday. Like following the FOMC tomorrow, if they don't raise rates, we might drop down to 96 cents and give us a good opportunity to get on the long side. So for today though, we're obviously finding support down here at 97.10. Should be right here. 97.10, breakout points here. Okay. We are in a range. Let's go to the dollar yen. The dollar yen is a little firmer this morning. Have the S&P downgrade of Japan. So that's spooked the dollar yen a little higher, kind of giving it a little oomph, if you will. Messy charts, huh? Dollar yen still stay the hell away stay the hell away. Uh, you know, stay the hell away list. I think 2065. I mean, it's really hard. This is a this is a very difficult currency to trade right now. You know, if we got to move up to 121, I would probably be a seller. I don't think I'm going to do it today, but I mean, for those of you that are looking for something to do, if you can get a rally up to 121 today, we might get a little, we could get a little bit of push higher based on the S&P downgrade. So if that's the case, maybe a move up to 121 yen is not out of the question, right? So let's write that down. Now support, I guess, is just back down at 120. I'm sure if you get down here, you're gonna have buyers down here, around this round number. I'm sure it's not great support. I just I would trade the extremes versus trading. You're stuck right in the middle of a range right here. It's like, you know, why trade it right at the moment? I'd rather be on the short side. As you guys know, I think the dollar yen's bearish. This move right here, very bearish. So, um, thanks, Polly. Polly just sent me a message. Thank you very much. Um, no, so this is still bearish. And man, if you want to short the dollar, like if you're like dead set on shorting the dollar, I think the dollar yen's the best short out there for the dollar. Just because, if the stock market goes down, the dollar yen is going to play probably pretty well into that. Despite you know the S&P ratings movement on Japan today, and as far as that goes, the S&P downgrade is realistically not that big of a deal, and it'll be forgotten literally within the next 12 hours. So if the dollar yen spikes up to 121, it's probably not a bad short up there, in my view. Okay? All right. Let's go take a look at where are we at? Okay, so dollar yen. Let's go over the dollar Canadian. Dollar Canadian. Oh, shoot, I didn't see that. I didn't see that hourly push below support. Look at that. Just enough to frustrate everybody, huh? Oh, yeah. All right. Okay. Let's make some adjustments here. Obviously, you can see whenever I draw trend lines, sometimes they need to be adjusted like that. You see that? Look at these touches here. You see it? Wick, wick, wicks, wick. Sometimes just a little adjustment is needed, and very good support at 132. I'll just write down 132 again. Resistance is back at just how we have our trend line drawn, but resistance right now is probably going to be right here. At 132.80 for now. Oops. Range continues to tighten, but it's still bullish. Copy, paste, delete. Okay. Still continues to be bullish in a very bullish trend. It's just, consolidating in this bullish trend. Okay. Let's go over to the Kiwi. So here's the Kiwi. And the Kiwi is, remember this gap that that I have here is just for those of us that have 5 p.m. rollovers that just happen to coincide with the RBNZ's rate decision the other day. Most European traders don't have this big gap in here, so don't think that, oh, there's a gap, it's going to get filled. No, it's probably not. What's interesting here is, I mean, it might get filled, but it's not because there's a gap there. Okay. What's interesting is if you look at this 4-hour chart, you'll notice that we cannot get a sustained break above the 618. You see it right through here? See the 618 right there? Okay. We cannot get we have hourly wicks above here on the 4-hour chart. We can't close above it, and the lack of ability to close above that 618 is really just brought in the seller. So that comes in at 63.60. So the resistance is whatever this high is, which comes in at 63.76, but 73.75. 63.75 is key resistance at the moment, but just keep in mind that we're having a hard time getting above this hourly or this the 618. So if we actually get a rally, anything close to 63.60 is probably a good short. Okay. All right. Now, support. Where's support here? I still think 63 cents is just going to offer some pretty good support for today. So even if we come down, 63 cents will offer support. Now, obviously if it breaks that, we got 62.50 down here, but 63 cents should offer support today. We're still in a bearish trend. I know you look at the Kiwi and go, oh, but aren't we range bound now? Yeah, we are making higher lows, but still, it's locked in a very bearish trend. We'd have to get probably above 65 cents for me to even consider turning it more to a range environment. Okay. All right. When I come back, we will finish up with the Aussie, the dollar index. We'll take a look at some of the Nordic currencies. Then I'm going to take some of your questions. So thanks everybody for being here. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So we got to finish up with the Aussie dollar and the dollar index and all that stuff. So let's go over to the Aussie. All right, here is the Aussie dollar. Now, I've got a little short in the Aussie. I'm down like 11 pips right now. I'm just kind of sitting in it. I'm short from yesterday. Got short right around here on that rally into the trend line resistance. Now we continue to push higher. Like I said, as long as we stay below 72 cents, I'm not really worried about it, but we really have to stay below 72 cents, in my opinion. So I know the overnight highs is 71.85, but I'm really most concerned with 72 cents. That is the underside of that weekly trend line that we broke. Okay. As I put up yesterday, we're more in a range environment now, but still, we could very easily turn back to being bearish here. Now, what I would be focused on today, especially with the Aussie, is where support is, because right now we're making higher lows. You can see higher lows, higher lows, higher lows, higher lows. Okay, so that means if we breach, really, we come down, we breach through the 7130. That's what kind of shifts us back to being, back into the range, if you will. Okay, so 7130, in my opinion, is kind of what I'm looking at roughly. Not like great, but roughly. We turn back below here, and it's going to start. We're going to start moving back down again. Um, yeah, remember that, like the Aussie New Zealand still looks really bullish. The Aussie Canadian looks really bullish. So the Aussie dollar still, despite the data from a couple of nights ago, it's still holding up very well. It's 71.30. It's not great support, but I think that'll shift us back to lower lows, which will push us back into the range. Let's go over to the dollar index. Okay, here's the dollar index, and you notice the dollar index is pushing right up against resistance. We wrote down resistance yesterday at 95.70. We're at 95.81 right now. Okay, 618 comes up to 95.95, which is 96 cents. That will be resistance today. We are in a range. Support. I mean, it's still down here at 95 cents, but I'll write it down. I just doubt we'll get there today. Okay. Let's take a real quick look at the peso. Let's see if there's anything happening there. So here's the peso, and I wasn't too hot on that lower trend line there, but we are sitting on support. If you guys want to go long the peso, it's pretty good risk reward here. I don't trade it, but if you want to go long, put your stops maybe 100 pips below or so, maybe 200. 1665, is support, and we're on it like right now. Just some food for thought. We have to break above this trend line though for it to turn bullish, so I can go ahead and just move this on over. We're literally on support right now. Okay. Let's go over to the US dollar Norwegian krona. Still range bound. Like I said, there was no Norwegian news that's pushing this higher. I couldn't. I thought there was a reason why we're moving higher, just because crude oil is stronger today. We should be lower, but we're not here. So, but there was nothing that I saw on the calendar. But we're just still very range bound in a bullish consolidation near the highs. U.S. dollar, Swedish krona, same thing. We're just at the lower end of our range, in a big range, in a very bullish move. Okay, so just still sitting there. All right, so that is it for the currency market. Here is your bias chart, and go ahead and write all that information down. I'm going to take some questions. Patrick H says Betty's